Why worry about something that isn't going to happen?
Why worry about something that isn't going to happen? Oh, that's perfect. They should put that on our money.
As we were talking about sentiment and the human aspect to some of this, people are always searching for the narrative, and I feel like for the overall boom and bust cycle narratives, China always finds its way into both of those. And I think the last couple of times we've had big recessionary events, specifically the GFC. The Chinese or China credit impulse was a big part of that recovery. It's a new world. The supply chain disruptions and people becoming more nationalistic, both politically and geopolitically, as well as just in terms of business operations. It seems like China is struggling to kind of, not only for themselves, but for the rest of the world, be that credit engine that keeps the market going at a time when things feel like they're slowing across the globe. Now, there's a couple things that you mentioned just a moment ago that I want to highlight on before I pass the mic off to you. The put call ratio is interesting. You mentioned that earlier in the year when it was lopsided one way, and then it's kind of come back the other direction. We have put some emphasis on FOMO in a couple episodes. Now, a few weeks ago, we did have a conversation that we revisited a conversation we had in the beginning of the year for an episode called Japanese Jawbone Roulette. Just recently, we did one with the title Hell is Coming, and we talked about various aspects of these forthcoming downward pressures on markets, and we revisited that Japanese carry trade and the role that the yen plays. Do you want to kind of encapsulate in a similar way the role that China is playing? And I won't get into specifics yet until you kind of share your thoughts,
Yeah.
but there are certain things that are starting to come apart in China at the moment.
Yeah, exactly. And the first thing I'll say as we get in there is that, a lot of times in order to keep, this show kind of on a certain track and to have a certain flow to it, we'll come up with topics, right? And we'll talk about certain things. But it's important to remember that all of this stuff is connected. So you can't just focus on China. You can't just focus on the yen. You can't just focus on the put call ratio. You can't just focus on psychology. And, what happens in California affects what happens in Tokyo, and it affects what happens in Frankfurt. And so it's really, especially when you're talking about macro events, it's hard to, just isolate one piece of the pie. Now, if the whole world is trending up or trending down in one direction, then you can kind of focus in on one little industry or something. But I think right now, macro is more important than ever. And because macro is so intertwined with each other, even though you might be talking about the yen, the yuan in China is part of it, and the dollar is part of it, and the euro is part of it. So, as we've talked about Japan a lot this year, it's been my view that the yen is kind of a key driver. Like, I think the yen and the dollar are the two most important things right now. But part of the reason I think the yen is so important is the influence it has on the yuan, right? And so, and the yuan is kind of loosely pegged to the dollar. Not exactly. It's very kind of a floating band, but in 2015, they did this kind of mini deval from the dollar. And then from there, they kind of pegged it to a basket and a kind of this loose basket. But since then, the yuan has been weakening. And part of the issue with the yen getting so weak is that it puts pressure on the yuan. And so then the yuan tries to weaken because they're regional competitors and they're both exporters. And so, if Japanese goods are less expensive, then people buy more Japanese goods. Well, then that puts more pressure on China. And so that's why we've said the weakness of the yen has put pressure on China. And not only that, but China has to import a lot of their basic inputs for their economy. They have to import a lot of food. They have to import a lot of energy. They have to import water. So they don't have a lot of the basic inputs that perhaps the United States has, right? And so because commodities trade in dollars, and I know that people will say, but they're starting to trade in yuan. Yeah, they are starting to be able to buy some commodities to a very small extent in yuan, but they still have to buy a lot of these in dollars. And so over the last year, as the dollar has gotten stronger and the yuan has gotten weaker, and we've had higher prices of commodities for a while because of the effects from COVID, then they were having higher costs to import these very important needed inputs, right? But at the same time, so they were having inflationary pressures and needed inputs. But at the same time, they're having deflationary pressures from a deleveraging event in their real estate market. And so, they've kind of got this damned if you do, damned if you don't. If they weaken the yuan in order to support the real estate market, it makes their input costs even more expensive. If they strengthen the yuan to make their import costs less expensive, then the real estate market comes under pressure. And not only that, but their real estate market has a lot of U.S. dollar-based debt leverage in it. And so as the dollar has been stronger, that's put pressure on them. And so it's really kind of the worst of all worlds. Now, within all of this, and part of the reason overall markets have had a pretty good year so far, is part of this narrative that China was finally going to reopen. So, a lot of the world reopened, let's call it 12 to 18 months ago, right? But China didn't. China kind of still had lockdowns. They weren't allowing imports and exports to the same extent they were pre-COVID. But the whole idea going into the end of the year and the beginning of this year was China was going to reopen, and they were going to do a credit stimulus. They were going to provide liquidity to the banks and to the industries, and then that was going to kickstart a growth trend. And so, that has been a tailwind for the markets. But going into March, April, it hadn't really materialized too much. Well, so then, people started to kind of question the narrative a little bit. So then the jawboning from the PBOC was, oh, no, we really are going to do it. We really are going to reopen. We really are going to stimulate. And so they've been stimulating. They've been easing the reserve requirements for banks. They've basically been doing the exact opposite of what the United States has. They've been doing easy monetary policy as compared to the tight monetary policy of the United States. And as a result, the yuan just keeps getting weaker and weaker. And so, as the dollar gets stronger versus the yuan, and they've tried to do the stimulus, and the stimulus just hasn't worked, their real estate companies, a couple of them, Country Garden and Evergrande, have come under extreme pressure. And these are two of their biggest real estate developers. Evergrande just filed for bankruptcy protection in the United States for all their U.S. dollar-based debt, and Country Garden is I think they're in the grace period on their debt payment, so they haven't technically missed it yet, and they haven't technically defaulted, but it's getting close to it. And so all of and here's the thing: is if we do get a massive default situation in the Chinese real estate market, which is probably the biggest market in the world outside of foreign exchange. I don't know how many trillions it is, but it's tens of trillions, right? So if there ends up being a hole in that market and you get a credit contraction in that market, one of the ways that China would potentially counteract that would be to do an overnight or some kind of massive deval of the yuan, provide a massive bailout to that industry, and they would do that by quote unquote printing yuan or devaluing the yuan, making it easier for those to pay off those debts. But that would massively depreciate the yuan. So, and what they would be doing by devaluing the yuan, it would be pulling inflation into China to counteract the deflation that's already in China. So think of it like that. They're pulling inflation. Well, if they're pulling in inflation, they're trying to export their deflation. Okay? So if they do that, if they devalue the yuan, that sends a deflationary wave to the rest of the world. And in that situation, the dollar rises dramatically. And we all know what happened last year, and we all know what happened in 2020, and we all know what happened in 2008 when you get a massive rise in the dollar. So this is why, people talk about how you can't taper a Ponzi. And they often say that with regard to the United States. But the reality is all countries run the same system. And this is kind of one of my points is like, you can yell at the Fed and the United States dollar and the way that they have their monetary system all you want, but just recognize everybody else is doing the same thing. And so China is kind of in the place that everybody thinks that the United States is eventually going to get into and going to have to bail out all these industries, have to devalue the dollar. That's where China is right now today. Now, it doesn't mean they're going to do it tomorrow, but that's the point, is that's what they're struggling with right now. And so if they do that, then they're going to be exporting that deflation, and that then sends the dollar higher. And then you get in these situations like, okay, so then that puts pressure on United States industries. And so then the United States industries, they have to start selling assets. Okay, now that they start selling assets, now you get markdowns on commercial real estate, right? So this is my point, like it's all related. We can't just talk about the yen. You can't just talk about China. You can't just talk about the dollar because it's all related. But the point is there is a massive hole in the Chinese real estate market. How they end up dealing with that, I don't know. But China's reopening and counteroffensive against their deflationary pressures is kind of like the Ukraine counteroffensive against Russia. It got all these headlines, everybody's talking about it, but it hasn't really amounted to much. And now people, or even those in the West, are even starting to say, this counteroffensive hasn't really worked. Well, people in the West are starting to say about the China reopening, you know what? This hasn't really worked despite their best efforts. And so what's the result? And I don't know what the result is, but it doesn't seem to be on a good path. And if you end up having a hole or some kind of a deleveraging event in the largest market in the world, that is a definite headwind. Whether it becomes a crisis, I don't know. I'm prepared for it, but it has the potential to be a massive crisis.
This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.